Hello and welcome to yet another episode of Beyond Budget Headlines. Today we'll bring to you the expenditure side challenges to the budget, how to boost foreign investment and the opportunities in the budget to boost jobs and growth. Our policy expert and editorial director, Mr. A K Bhattacharya, will be joining us. Hello, A K B. Welcome to the show.
Hi.
So, sir, every budget has something to offer for the oil sector. And now the oil prices have been growing up. There is a global demand, highly volatile prices, and increasingly stringent environmental regulations. What do you think the budget is going to do for the oil sector?
The oil prices have actually come to the rescue of the government in many years. Indeed, the fiscal consolidation program that we saw in the first 5 years or even 6 years of the Modi government, that was to a considerable extent possible because of relatively low oil prices. And the government has been very savvy, intelligent in raising excise duty on retail petroleum products and mopping up revenues from the sector without any increase in the retail prices. So that has helped government mop up some revenues and bridge the fiscal deficit. And in the current year, the government did something similar. The oil prices were going down. They went down from around $60, $65 per barrel to as low as one point in time, it was around $30 per barrel. And now, of course, they are inching up. So when they were low, the government raised the excise duty on petroleum products. And the result of those measures can be seen in the government's revenue numbers currently, at a time when all other revenues are falling, in a sense, compared to last year, as well as compared to what they had targeted to collect the current year. They have been all in a decline mode. But in the case of excise, which is largely the oil sector revenues, the excise revenue from petroleum products like diesel and petrol, now those revenues are rising. For the first 8 months, if you see the numbers, excise from oil sector has actually risen by 47%. Now, this pace will continue in my view, and you will end the year, instead of collecting around 2.6 trillion rupees, you might end up collecting 1.1 trillion rupees more if the current trend is maintained. So the oil sector has given the government and will give the government a kind of bonanza that will help it rein in the deficit in the current year. But next year, that advantage may not be there because oil prices, as you said, are going up. They're already crossing $50 a barrel. And if they go up any further, there will be pressure on the government to reduce the excise duties that were levied and raised in the current year. In April, May of 2020, they were raised. So if those duties have to be rolled back, then the government's revenue position will be impacted. So the oil sector poses this big question before the government's revenue management efforts, that if the oil prices continue to rise as they are right now, at what point will the government come under the political pressure of rolling back those excise duty increases that were effected in April, May 2020? And once they are rolled back, the government's revenues will suffer. So the important challenge, the most critical challenge for the government from the oil sector would be on the question of whether the oil sector continues to provide the kind of revenue buoyancy that was seen in 2020-21. That's number one. Then the second point where the oil sector becomes very critical for the budget is what kind of disinvestment revenues can be mobilized from the oil sector companies. As you know, that BPCL, an oil refining and marketing company, was put up for sale, but unfortunately, that sale process has not been completed as yet. So one can expect that it may be completed maybe in the last couple of weeks of March. But if it is not done, you will see that probably in next financial year, you will see it. So that will give you a good disinvestment revenue amount. In addition, I would not be surprised if one or two more oil companies are put up for sale, because that is what the government's privatization policy or the public sector policy that was outlined in the wake of the Atmanirbhar Bharat Yojana that was announced in April, May. That's it, that public sector entities accept two or three companies in a certain sector, the rest of the companies will be privatized. So there are almost half a dozen oil sector companies. So you might see that maybe one or two companies are kept in the public sector and the remaining ones sold off. So if that happens, with oil prices rising, they are likely to fetch a good price and the government will benefit from sale of public sector oil companies in the next year. The third element would be that the subsidies on the oil sector. Government incurs a very small amount of oil subsidy, around 45,000 crore. That will be impacted to the extent that if oil prices go up, the cooking gas subsidies, they have been reined in a lot. But still, the government incurs cooking gas subsidies, as I said, about around 45,000 crore. Now, that might go up a little bit, but that is not that much of a worry. The real worry would be if oil prices go up and the government is forced to roll back its excise duties, which were increased in April, May. If that happens, then it will pose a fresh challenge for government's revenue efforts.
Right. So there's another news that big ticket foreign investors could find their proposals getting in the fast lane. And there is a proposal, according to sources, Business Standard has reported that government may create a special window for such strategically important investors. How do you think this is going to play out in the budget, sir?
Government needs to have more foreign investment because domestic investment from the private sector is yet to pick up. 2020-21 year has seen a significant increase in foreign direct investment in many sectors, but bulk of those FDI flows have come in what I would call secondary investments, in a sense that they are not primary investment, they are not in greenfield projects. They are essentially come by way of acquisition of shares in existing companies or existing projects. Now, they are still FDI because they're foreign direct investment, purchase of equity in existing companies, but the kind of benefits that a primary sector, primary FDI inflows create in terms of additional jobs, in terms of demand creation, relatively speaking, in a secondary flow of foreign direct investment will not create that much benefits. So it will be good to see that if the new window that is being proposed to be created in terms of FDI inflows, expediting more money from foreign sources, if those investments, there is a greater incentive for bringing in FDI inflows in the primary route instead of the secondary route. Because in a primary route, the benefits are much more than if you bring in FDI through the secondary route.
Absolutely. So there is another proposal, and this is obviously addressing one of the big challenges, that is the job creation. And budget could have a special focus on the construction development and also on the affordable housing segment to increase activity in these areas and boost the demand in the economy, because they have these forward and backward linkages. How do you think the budget will treat construction sector, sir?
I think it is one sector which requires a big push because there are early signs of a pickup in the construction sector, in the sense that the housing activities have picked up. Real estate market has picked up after remaining pretty almost dormant for several years, both in the housing market, the residential market, as well as in the office realty sector. There are signs of a pickup. And this positive sentiment can definitely get a further boost if there are more benefits, fiscal benefits extended to the construction sector. As you know, construction sector creates a lot of jobs, particularly in the unorganized sector. Workers come from different segments, different parts of the country. And if you see more houses being built, not just affordable houses, but even middle income category houses, office property, real estate property, they get built, then it does create the jobs at a level where you need those jobs in unorganized sector, informal sector jobs will get created. So I think construction sector holds the key. And what you may see as an incentive only for the construction or the housing sector or the commercial property sector, you underestimating the impact, the positive impact it will have on the MSME sector, which is a key focus area for the government, because as we know that there are about 67 million MSME units in the country. Many of these units are actually feeding into the construction sector. They get benefits from the construction sector. So I would be not surprised at all if the budget this time has a handsome package for the construction sector.
Just 1 week left, sir. The great insights that you've shared with us today. A lot of opportunities and also some challenges that you have shared, that oil sector can be a cause of concern, this budget. We look forward also to your insights in this special bonus episode that we'll have this week on how to read the budget, depending on who you are. Mr. A K Bhattacharya will be joining us again to share his insights and guide us through the budget that is just about a week away now. If you liked this episode, do share and subscribe to Business Standard. You can also log on to our website business-standard.com for more news, views and insights. Do follow us on all social media platforms, and you can write to me at RTTrivanshi on Twitter with any suggestions and feedback you may have on the show. Thank you for watching. Stay tuned.